Hi there. Okay, welcome to Milta Hub. My name is Michael Lesian and I'm excited to be your host once again. I know it's been a while. We dropped a video here for for you to feed on, but I want to say that we're sorry. We're going to be bringing to you a lot of content back to back. So you will want to like and then subscribe to this channel if you have not done that. Okay, so I like to share something with you very briefly. I don't intend that this video be longer than 10 minutes. It should be less. So let's get back to the most important thing right now. So I just want to share with you basic trading checklist. What do you need to check? And then before you engage in any trade. And however, I'm going to be sharing with you a very sharp crash and boom strategy as a way of re-emphasizing what I have taught in the past or what I have said before. Nothing really has changed, but there is a new perspective to these things, and I want you to pay attention. Okay, so number one, basic trading checklist. Identify a trend. All right. Now, when I say identify a trend, I mean try to find out the overall flow of that asset. For example, you can go to daily time frame, you can go to weekly. Try to find out where this trade or this asset has been flowing to. For example, has it been buying for a while? For how long? Is it for a month or for 2 months or for 2 weeks? You can use your eye to do that check. Use daily time frame, use weekly time frame. Find out if you have more sells or more buys. That's what I mean by identifying the trend. Now, trend means direction. Where is overall direction of this particular asset? Excuse me. Number two, locate structure. By locating structure, is not you don't locate the structure in the higher time frame where you're finding the trend. You're locating structure within the closest interface of the current price. I'll show you what I mean when I get to the chart. That's to say that you can come to 15 minutes after you've determined the overall flow. However, don't forget, always flow, always take your decision in the direction of the higher flow. Okay, never trade against the higher flow. So you look at structure, all right? Look at structure. We have bullish market structure, where a situation where the market creates higher highs and higher lows. And we have bearish market structure where the market creates lower highs and lower lows. Just look at the structure. Okay. Number three, wait for a retest or a rebound. Okay. After you've located structure, wait for the market to retest to an area and a zone where you feel it's more adequate to take the trade. Number four, take trade after confirmation. Okay, there are different confirmations you can check. We have indicator kind of confirmation, and then we have candlesticks confirmation and all others. Then in number five, in all of this, don't be in a hurry. This is very critical. This is important. Please don't be in a hurry. You have to exercise patience. Sometimes these things can test your patience. Exercise patience, okay? And don't leverage too much so that your patience will not run out. And then you begin to push your trades in losses. Now, don't forget that there is no system that will be 100% efficient. We also have little limitations, however. But then let's get into the crash and burn strategy. Then maybe we'll try to see if we can apply some of these things I have listed above. Okay, so here we are, and this is my asset panel, my quote panel, and I want to pay attention to crash 300. I just want to share something with you as far as crash 300 is concerned. So I come to crash 300. First and foremost, there is something I need to share with you. We call it an hybrid system because it's not just about the indicator, it's in the indicator with technical analysis. You just marry the both of them together, and then for more efficiency. So I'm going to switch to my other where are you? Yes. Okay, so this is crash 500. Okay, we are looking for crash 300. Okay, let's work with crash 300 for now. So you see, this is just a simple chart, just one indicator on the main chart, and then RSI 6 usually. Now, the essence of the RSI 6 as a constant for me is to try to find divergence. Okay, but let's focus with what is before us. So let's look at crash 300. So first and foremost, I want to go to weekly. If you look at weekly time frame, there is a pattern the thing is trying to form, which we are not sure yet. Even if it's going to form that pattern, it's a long-term thing. So we can't rely on that alone. So we have to live weekly and come up, thither to more lower time frame so that we can find at least something to make a daily cash from. Okay. So if you look at what it is, for those of you that are very conversant with some patterns, this is typically going to be a bearish flag pattern, something like this. Okay. All right. Something like this. Okay. Stay with me. Something like that. So we don't know when this will happen. When it will get to the point where it will break and then continue going downwards. We don't know when that will happen. But let me pick it. Let me just look at monthly if it can show me anything. Okay, monthly is not showing me anything that looks good enough. But I think I've seen something there which I will share much later. So let's get back to our daily. Okay. Now, when we look at our daily, you can see that I'm going to take off that stuff. When you look at our daily, you see that there are a few things I can point out to. Concept of trend lines. You can see that this was rejected along this area, something like that. And then we can also see that this thing also happened. It can also come from the top. Just to understand, we're trying to find a reason why. Uh, okay, something like that. I think, does it make sense? Okay, so we're just trying to find something. So this is the situation we have found ourselves. Going upward, there seems to be a trend line. And then coming at the bottom, there seems also to be an higher low kind of trend line. All right. So now we are left with this kind of structure. And we're trying to find if the market is going to go higher or it's going to go lower. Now, don't forget that we have seen, roughly that there seems to be a bearish flag on weekly, which is still forming. Right now, it is still forming the flag channel. This is still the flag channel area. Okay. But we want to know if our biases is good enough. So we come to a lower time frame. Now see what happens. I'm going to go to H4 and then go to H1 and then go to M30. Okay, let's look at this. You see, if I stay here, there are a few things I would love to do, but I don't want to confuse you and I don't want this video to be long. So rather what I'll do, I'll go and see if my indicator can help me form a bias. So what I do is, remember first you find a trend. In this case, we can say that what is very dominant, if you come to daily, as being a bullish market. Judging from this higher low, market has been pushing, it came down, pushing. So market has been creating higher highs and higher lows, at least at this instant from what we are seeing. So, but that is not all there is to say. Okay, we can also see that the market has been descending, so it's putting pressure right now on the asset, and the market is dropping again, having touched those upward trend lines. So, but there is something I want you to do. So we're going to come here. Rather, there is something I need to show you. We're going to come back to okay, sorry, this is what we're looking for. Good. Now I want you to stay with me. Please, there is a point I want to make. Other blocks attract other blocks. Don't ever forget that. Write it somewhere. My brother, write it, write it. Uh-huh. Other blocks attract other blocks. And I'm going to explain it to you. Okay? So stay with me. Stay with me. Now, so what I'm going to do is this. Why did this trade return at this point? First and foremost, let us start with the very first one. I'm talking about this top, the top one, this top one. You see that area? Why did that trade bounce off at that point? And then why is this one bouncing off at this point? We're going to look at it together. So let's go to the first one. Why did it bounce off? So first and foremost, I'm going to clear everything, okay? So we have just what you're seeing in front of us here. So what I'll do basically is, all of these other parts were not formed. So what we have was this bullish move that was riding. I need to find this, okay? It was this bullish move that was, riding, like that, right? Okay. And then at a point, it hits a resistance somewhere and started dropping crazily. So, but let us pick a few things. So let's assume your trading crash 500 and you don't even understand what the structure is doing because you can't simply find a good kind of, maybe a reasonable kind of structure in this case. Remember what I said? After you identify the trend, you look at structure. So this has been a bullish move and you don't know when this market is going to start selling. Okay, so this is where I want you to learn something. So what you do basically, because you see, crash and boom is not like Euro USD. It's not like forex pairs. It's a different class of asset on its own, and you just need to learn it and understand the body language of these assets. That's the truth. They are synthetic. Call it rubber assets. So you don't. They are not tied to any data per se, any fundamental data. So you don't expect it to have a natural way of behaving. It will have an unnatural, an uncommon, an uneasy way of behaving. So, but there is a way you can also help close the gap of these uncertainties. Huh? So this is what I'm going to do. Basically, it's just a strategy that will help you catch the tops and then also catch the bottom. But don't forget what I said. Don't be in a hurry and don't rush. So what you do is I'll come to M5, squeeze my screen, and then go back. I just want to show you something, my brother and my sister. What you need to do is that when you squeeze your screen to level 1, you see there is something called asset exhaustion, or what we call it asset movement exhaustion. When an asset has been buying, it will certainly come down. It's a general law. No matter how something goes up, normal law of gravity says it will certainly come down. If you throw something upwards, it will definitely come back somehow. Now, this market has been buying. It has created a lot of exhaustion and then it wants to relax. So it has to come down. For you to be able to gauge when that relaxation will come, is for you to use these indicators. These indicators may lack true, but it will give you an idea of what to expect. Now, the problem with many people blowing account with crash and boom is because they sometimes they don't understand the overall flow of the market. So, for example, the market could be going bullish in an overall scenario. There's a clear structure showing you that it's going to buy, however. Then you now come and squeeze your screen and you want to sell. It could just drop a bit, no doubt. And after dropping a bit, you start firing up. But I want to show you something you could do, what to do in some scenarios. So let's look at it quickly because I don't want this video to be longer than 10 minutes. So pay attention. Anytime you see this RSI 6, moving average 5, and this um, 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 moving average 200, get to this point. You see that point? After squeezing your screen, as in the three of them congregate at the topmost top. Even if the 200 is not there, but you notice that the blue and the orange color are at the top. That is the two of them at the top. What that two represents is exhaustion. It means that the RSI had gone there, but the market is not willing to drop. So it now had to carry with it the moving average 5. So anytime you see the both of them at the same direction, at the same point, what it means is that the market has overstretched. It can't go beyond that point. It means it has to start coming down. That is exactly what happened to crash 300. So when it got to that exhaustion at this point, this is where it was. And then it started dropping. Okay, so let's call ourselves that. Let's just say we are lucky. We got that one. We got that drops and then it dropped and all of that. But we have to apply a few technicalities to this. Okay, so this is where it comes. So that has happened. Okay, so we now have that drop. Okay, remember it's zoom level 1, not 3. So the thing now came down and maybe a few drops. Now understand that even if you pick, if I personally pick the trade from the top and stop. So if I just did this to this point, that's 121 point, which means if you use one lot, for example, you make $121. No jokes. But let's assume that you don't even have the courage to hold that long. If you can find 20 pips, 30, my dear brother, what are you waiting for? My dear sister, it's enough. Just pick it and go away. Okay? But don't worry, you can pick as much as you want. Now pay attention. So let us assume that also came down. So we're squeezing again, right? We're squeezing what? Again. I want to show you something that you will like. So the market came down, came down. Now pay attention. When it also got down to the 10 level, that is the moving average 5, and also the moving average 200. You see what happened here? I want to show you. Look at what I'm talking about. By this time, the RSI had arrived, but nothing really happened. It still, it still was dancing around, you know. But immediately after this, this one arrived from here, it traveled down to this point. As soon as it hits this 10 level, and this one also traveled down and also hit this level, it means that something was about to happen. It was going to start buying. And I'm going to show you how you can balance the both of them together. Don't just rely on the indicator now. How you can balance this technically. So look at what I'm going to do. I also picked the trade from this level too, frankly speaking. Now, I'll show you something now. So what happens is this. First, I'm going to come to H1 so that it will make sense. So see what I'm going to do. You see this level? You see this level? Look at this level. Okay? Maybe let me use H4. Okay. Okay. All right. Okay. So this is what I wanted to do really. I wanted to remember what I said earlier that other blocks attract other blocks. Don't ever forget that. It will help you when you do some more study. Other blocks attract other blocks. So what happens? See what happens. If you see this is a bullish order block. The last bullish order block, I'm going to draw this from that last candle to the future here. So that is what happened. That's exactly what I did in real time. So when this thing got to this point, I knew that definitely it has already bounced off on my moving average. And there is, a collaboration. There is an agreement technically. So I knew that it was going to buy from here, and it started buying. And it bought to this point. Don't forget what I said. Other blocks attract what? Other blocks. So we have this buy, and then at a point, we also have something like this. So let us leave it at here. I'm going to drag it to the future here. Okay, something like that. And then I'm going to switch to 30 minutes. Okay, very good. Look at what it is. Other block attract other block. You see, this is a bullish candle before this bearish down. Before this bearish move down, other blocks attract other blocks. You see that? Let me show you. Let me circle it. There is a white candle there. That is a bullish candle before this drop down. Okay? Right. So we have to trace it to the future. So what that means is that we are going to find and we're going to try to find another block. It's as simple as that. So what we do is we engulf all that candle and we drag it to the future. It's as simple as that. I knew that this level was the level where this market was going to rebalance and come down. I knew it. I wish you were with me, but I knew it. Now, apart from that, I knew that something is also happening here. This is a lot of rejection around this region. You see that? Coming from this area, you see, this rejection. I'm talking about this point. You see that? That's a lot of rejection that push price upward. So if you trace that to the future, you can find out that that level will hold because it's actually a pressure level. And so price had to come down. It had no choice. But at the same time, let us look at what contribution the indicator can do in this case. So we squeeze our screen and we go back. Now, if you check what is happening now, we didn't have how do we call it? Indicator showing us 90 and the above with the moving average 5 and 200. And the reason is because technically this was going to happen. So the only case you will have to use indicator in this respect is when technically you can't find anything and then the market is buying or endlessly selling, and every reasonable structure is broken or is not respected, that's when you now use the first option I show you, squeeze your screen, because what is going to happen is going to be what we call asset movement exhaustion. When that exhaustion takes place, it's going to breathe. That's the language I use. By that breathing, it's going to drop, or by that breathing, it's going to spike after a long sell. That is if it's for boom. So these things happen, and frankly speaking, these things can be predictable. Okay, so that is the secret. So don't ever forget it. So you want to ask me, I know somebody's asking me now, oh, I wish it shows me the settings. Let me show you. So RSI is 6 here, the levels 5, 10, 20, 50, 80, 90, 95, and then moving average is 200 exponential, and then moving average is 5 exponential. It's as simple as that. And then the other indicators in the chart are inconsequential. They are not very important. Okay, so I'm going to just show you something else. I don't know. Okay, 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 fine. I want to show you something else so that you can come back to it in the future and coach me. Now, remember what I said? I said other blocks attract other blocks. Did I say that? Yes, I did. Now, what's the next other block after this one? I know you can find it. Look at it here. The next other block is this one. Okay, you see that red candle there that gave rise to this bullish buy? So I'm going to drag it to the future. What that means in essence is that this movement this current movement will eventually get to that point before any other thing happens. Now, it doesn't mean it's going to just drop straight to that point. It could dance around, but that is where the next call is. So other blocks attracts other blocks. This reaction happened within another block, and then there is another block waiting at the bottom. It has to come to that other block to greet it. Okay, you can time this later. You can check this later. As soon as you see this video, go back and check the date and see if it eventually happened. All right. So you have to master that. Other block attract other block. Don't be too far away. For example, make sure that it is, if it moved from an other block point, mark that other block, the next one. Just don't be far away. Make sure that you follow it up, other block to other block. Other block attracts other block. That's the secret. All right. So I've said two things. Don't use the indicator aimlessly. Only when technically you can't find anything. It doesn't make any sense to you. And then the market is just buying. It's breaking all the rules. That's when you can use the indicator. Squeeze to zoom level 1. As soon as you find the moving average at the top, the RSI at the top, and then maybe the 200 at the top, that's when to make a decision. And don't go so heavy. You can start small. As soon as you start seeing the movement, most of the time you will see a break of structure around that area. Maybe even if it's 5 minutes time frame, you can find a break of structure. A break structure there is a good movement. So you can jump in. Let me quickly go to 300. Just let's check something on 300 if we can find anything. So what am I going to do first as a trader? I go to weekly time frame. Oh, and coming to weekly time frame, it's been selling, right? So we know that this has been selling. That is overall flow of the market has been selling. So we come to daily. We can find anything. We can find that it is still selling. We're still seeing a sell structure here. Okay, and I can quickly show you something because I understand other patterns. So what I'll do is that I've already found a hidden bearish divergence here. Excuse me, this is what it is. Excuse me. Okay. Okay, so something like that is happening. And then we have this. Okay. And that is vertically aligned. So price is creating a lower high on the chart and is creating a higher high on the oscillator. So by that, if you understand the rules of hidden divergence, this is what is going to happen. Here, price is going to keep going down. That's from the rule of divergences or hidden divergence in this case. So technically, we have found out that it's going to sell. So even if it does a little spike up now, it shouldn't affect you. So what next I'll do is I'll go to H4. Okay, if I come to H4, you now see that the divergence is very clear here, and then it has scattered our oscillator on daily time frame. I mean, yeah, so it's fine. Okay, price is selling. It's been selling and it's going to keep selling. So the next thing I have to do is come to H1, and if you can see from H1, this is a whole lot. So what I need to find now is to find the next other block. Is to find what? The next other block. Now pay attention. This is the next other block. You can go check this thing out. If you see there is no other block prior to this movement, so the next one is around here, somewhere around here. This is the last bullish candle before the bearish. Sorry, this is the last bearish candle before this bullish move. Okay, so I can, just to be fair, I can use the all of this area and point it. What that means is that I'm expecting price to attract this other block. Definitely. So when that happens, this will be my first, my long-term TP, okay? And this is even on H4. So that is basically what it is. So even if it spikes to the top now, to just this level, maybe to this level, it's not a problem. The sell is intact, and that is what it is. So other blocks attract other blocks. Don't ever forget that. It will help you to make your decisions more concrete. Okay. So we can take all of these out. Yes. Okay. So that is that. Let's look at Crash 500. Can we? Yes. Okay. So Crash 500 is here. So what we have here is good. It's good. It's good. It's good. Okay. Now see what happens. I want to go straight to the point as far as this is concerned. Normally, if you check, this will pass for something like this. You see, you have to first look at it in a technical way and see if it can make any sense. All right, something like that. So this is a flat, bearish flag pattern, which of course I believe that this will fill up to the bottom. But let's see if we have any other reason beyond that technical, frame. So what we need to do is, I'm going to clear all of that again. So what I need to do is, first, I want to check why this trade started moving from this point. So I draw this, okay, and then I now amplify it, go to H1, then I drag it to the future. If you see what is happening here, you will discover that this is another block, okay? That is from that point. That is the last bullish candle before the bearish move. So that's a bearish order block. If I drag that, that was the only or the last bearish order block prior to this movement. So price came at this point and then respected that, significant order block. And then it started dropping. So I can almost tell you that two things are happening here. Two things are happening here. First, we have another other block that it's calling for, and that is this one. Okay. So, but then there is another thing I want you to check. If it breaks this level, if it breaks this level, okay, that's the only condition. If it breaks this level, assuming this level is a very strong level, if it breaks this level, but I can almost tell you that it's going to come down. Why? Because technically we are seeing a flat pattern. Okay, so if it breaks this level, there's going to be a serious free fall. As soon as it takes out of this level right now, it's going to have a serious free fall to this point, just attracting this other block. So that is what it is. Okay, now you can also use M5 in most cases to catch it. You see what I told you now? See what happened when these two things are at the 90 level. When the moving average 5 and the 200, in any case, as far as 5 minutes concerned, is at that 90 level. It means that the exhaustion, the asset movement exhaustion is done. It will start coming down. But remember what I said? Don't ever be in a hurry. Don't push this thing. Let it just happen naturally, and then you'll benefit from it. Okay, so my name is Michael Essien, and I'm a trainer, and I would love you to be part of our support, my support community, where I dish out information. And by the way, there is a forex course available. That is for those who want to learn how to trade currencies. There is a macroeconomics perspective to it. There is a strategy on how to trade news, and there is a lot of other key information about currency trading. And then there is also a special course on how to trade synthetics indices effectively. I'm going to share the testimonial link in the description space of this video. I'd like you to go through and see what people are saying about the SPT 101 course, how they are benefiting from it, and how their life is being transformed. So if you want to be part of any of these things, uh, there is an inquiry link that will lead you to us so that we can interact with you. We want to help you, and then you can be the best you can. Thank you so much. And I just hope that this is not more than 10 minutes. If it is, I'm very sorry. I'm very, very sorry. All right. So see you. Cheers.